This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
All right, just like our TV colleagues, we're going to stay with earnings right now, guys, and we've got a great voice. Microsoft, Alphabet, so many out with earnings, few others. Lucky for us, we have someone who invested these names. He's like a gold mine. James Chakmak is back with us, partner and technology analyst at Clockwise Capital, $345 million in assets under management. But you check his holdings, these are the names: Microsoft, Google, Visa, so many. James, great to have you back with Tim and myself. How are you?
I'm doing great. How are you?
Doing okay. Let's pick Microsoft first. It's rallying big time in the after hours. Walk us through earnings. I know you're going through them just like we are. What jumps out for you?
Yeah, I mean, the big thing there is that you continue to see resiliency on the cloud side, while the legacy parts of their business anniversary the tougher comps and come out stronger. So, and at the same time, while being able to manage the bottom line. And obviously, it's a juggernaut. It's 10%, of the Qs, and so it's a big weight, important stock for the market. But the main thing is that the growth sector factor continues to be where the money will likely continue to flow and coming out of the value area.
Okay, let's go to Alphabet because shares are getting punished in the after hours right now. We have third quarter cloud revenue coming in below estimates. 8.41 billion estimates were for 8.6 billion dollars. Alphabet third quarter revenue, excluding traffic acquisition costs, did beat estimates though. What's sticking out to you?
Yeah, I mean, the big thing there is the buy side expectations were a little bit ahead of where the street was. So the whisper numbers were looking for an upwards of 10 to 15% upside revision to earnings as you look into next year. And with cloud coming in a little bit softer, that may end up being a high margin contributor as you look down the road. That may be posing somewhat of a headwind. We got to look to the call to see what the color is on things, but overall, Alphabet's not going anywhere, Google's not going anywhere, and we just need to see how much of a blip this is. Is it a single quarter thing, or does it have several quarters to work through?
Yeah, down 5% right now, Carol.
Yeah, and what's interesting, we initially saw Meta, I think, take a little bit of a hit in the after hours, but right now Meta's back up. But shares of Alphabet still down about 5% here. All right, so in terms of, these are all important numbers, and certainly they can sway what we see in the overall market. Microsoft and Google, what is it, Tim?
I'm sorry, Snap is crossing right now, so I wanted to make sure to get this in. We got a redhead. Third quarter revenue for Snap coming in above estimates, 1.19 billion, estimates for 1.11. Snap just absolutely surging in the after hours right now, up 20%. I think, Carol, this is because the company authorized up to $500 million in share buybacks. Also, James, I know you're following along live with us. The COO, Jerry Hunter, is set to retire. Fourth quarter view is internal forecast, though we should note is not a formal guidance. Of those headlines, what sticks out to you?
Well, and I'll just say, they also did talk about the fourth quarter revenue, 1.32 billion to 1.38 billion. The estimate is 1.33, so upside there.
Not formal guidance.
Not formal guidance, but they're at least giving us some numbers. So go ahead, James, take it away.
Yeah, I mean, Snap actually had their numbers leak, a couple of weeks ago, and so good numbers were expected, out of that this quarter. I think the bigger picture story is that digital advertising continues to gain share versus legacy media, and that trend is just going to be increased in full force with the assistance of AI and the contributions of AI into the creation of content and the creation of ads, which will drive down costs and in turn likely increase the amount of ad spend that's placed on digital platforms. And niche platforms like a Snap will benefit, but at the end of the day, we think that scale matters most. And companies like Meta and Alphabet, and to a somewhat of a lesser extent, Amazon, will benefit. So the niche platforms are in a rising tides lifts all boats situation right now. But as you look, a little bit further down the road, we think scale is going to win out over niche.
I'm just going to say Snap is down about 88% from its September 2021 high. And yes, even though it's rallying in the after hours, up about 12% as we speak, it's a below $10 stock. It's no longer, it used to be up above the 80s. So a little, as you say, what is it?
When in doubt, zoom out. I mean, but speaking of, I want to go to James on this because James, you've been covering Snap for years. I mean, even in your previous role as an analyst solely focused on tech. I mean, I think you were covering the company even before, when it IPO'd. You have a long history with the company. When did you sour on it?
I soured on it maybe 1 or 2 quarters out out of the gate because essentially, they had positioned themselves as a camera company, and we took that bait and ran with it because the DNA of a company matters, and their points of differentiation matter, especially when you're going after a company like Meta and Alphabet. So you have to be differentiated in some way, and they came up with the whole vertical camera and we're leaning into that. But, you'll read the first line of their prospectus. It said it's a camera company. But when you looked at what Evan Spiegel was actually trying to do, was they were trying to be everything to everyone, which is what Meta is, a full scale player like Meta. And they didn't embrace their niche different points of differentiation. And if you try to be everything to everyone as a niche player, you lose. Twitter tried to do that. They lost. Snap's trying to do that. I mean, going back to their IPO, they've lost tremendously, despite the recent rally. So, you got to know your DNA, and you got to embrace it, and don't be something that you say you're not.
So let's just remind everybody, Alphabet out with earnings. It is down about 5% in the aftermarket. This after those third quarter results. What we're seeing that traders are focusing on is the cloud unit reporting sales missing estimates. So third quarter Google Cloud revenue of $8.41 billion. The estimate was $8.6 billion. And then you've got Microsoft going in the other direction, up about 5% after their first quarter revenue tops estimates in a big way. And then you've got Snap soaring up about 13%. Their third quarter revenue topping estimates, but keep in mind it's a stock that is way down from where it was. A little perspective. So some of the big tech names that we're seeing, and we've also got Texas Instruments out.
Yeah, really notable moves from some of these companies. I want to go back to Alphabet and talk a little bit more about it. Get your thoughts on Alphabet. As Carol mentioned, James, down 6% right now in the post market. I know we have to wait for the call. What's the question that you would ask on the call if you were able to join?
For me, it would be about just continued cost discipline. I'm not worried about the top line. You're going to have ebbs and flows in the cloud, especially with the uncertainty around the macro picture. The sales cycles of migrations and whatnot.
So where do you want to see that cost discipline? Do you want to see it in the free massages at work type of thing and free lunches at work, like the thing that these tech companies are known for? Or do you want to see it in sort of not investing as much as they're investing in new projects?
And both, ideally, but obviously the big drag continues to be in other projects that may or may not come to fruition, and then most times they don't. So continued discipline there, and then tightening the belt around their G&A, their general operating expenses wherever they can, because with this kind of margins, with this kind of revenue, and the potential of the incremental margins afforded by advertising dollars, they should be able to continue to trend earnings in a powerful way higher from where they are right now. So, I mean, I have myopic focus on the bottom line.
Hey, James, these are names that you have in your portfolio: Microsoft, Alphabet. Yes. Anything in these reports that make you want to go out and buy some shares or sell some shares?
Well, we grossed up both Alphabet and Microsoft going into the print. At the end of the day, though, it seems like a wash between those trades. You can't win them all. We try to win 51% of the time. But no, I don't think that it really changes. We are underweight Microsoft relative to the index, but we feel comfortable with our weighting there. And we grossed up, in anticipation of a potentially strong quarter. Alphabet, we're marginally underweight relative to the index. Feel comfortable with that. There need to get more color on it. But the other big ones are Meta tomorrow and Amazon, Thursday, I believe. Well, that will really kind of define what the rest of the year looks like for the Qs.
James Chakmak. He's still with us. He's partner and technology analyst at Clockwise Capital. They've got $345 million in assets under management. He joins us once again on Zoom from Miami. We're talking today's mega cap tech earnings out just now, and some other companies as well. And for today's weekly Bloomberg Plugged In segment, when we dig into the EV space, we've got a lot to talk about with Tesla when it comes to Tesla, and we're going to do that with James. Tesla, James, a top holding in your portfolio. We want to get your thoughts on that earnings call last week, and Elon Musk. Carol described his mood, I think, as dour. I think that's fair to say.
It was a bit of a bummer, man.
It was a bit of a bummer. What did you make of it?
Yeah, it was pretty bad. I mean, it was as bad as you you could. It's the call that you never hope for. It was. I don't know, how should I frame it? Basically, every area of opportunity and optionality to the upside was met with a caveat and kicking the can down the road on the realization of those opportunities, whether it be the expansion of margin on the power side of the business, whether it be the cadence on the rollout of the Cybertruck, or the productivity gains and the margin improvements on the production side. All those things, push the can down the road, which essentially means that our 2023 targets move to 2024, and our 2024 price targets move to 2025. So essentially that call did a 1-year reset on our valuations.
Wow.
Well, in the EV world, I feel like, James, a year from now is going to be even more interesting potentially as we see more entrants into the EV space, right? And more competition for Elon. So do we have to start thinking differently about this company that maybe, I don't know, I don't want to say viability, but just what its role is and its place and its share of the market going forward?
No, I think, as you look at the company fundamentally with a multi-year horizon, which is increasingly difficult to do in this market environment, we kind of, our time frames have moved from 5 years to 3 years to 1 year. Now we're looking at more like 1 month, and sometimes even 1 week at this point, just given the volatility. And but if you are able to take that multi-year view, we think that it still continues to be a undervalued asset relative to its potential. The amount of data it has amassed relative to the entire industry, every other competitor in the industry combined, that head start there is something that is insurmountable. And we think that they will continue to have the opportunity there to monetize that. And at the same time, the power business is still in its infancy stages and it's only about 10% utilized right now of their capacity that they've built out. So, there's tremendous margin opportunity from that side as well. And I think that people will increasingly stop looking at Tesla as an auto manufacturer and more as a holistic play on data and power.
We just want to mention Tom Emmer ends his speakership bid, becoming the third GOP nominee to fail. There's been a lot.
I thought he was making it pretty far earlier today.
I feel like there's a lot of horse trading going on in closed rooms. Yeah, exactly. But
James, don't worry, we're not gonna ask for your thoughts. Maybe James Chakmak will be Speaker of the House.
Yeah. What's easier to figure out, Elon and his world, or what's going on in the U.S. House of Representatives?
Maybe we'll send James to Washington.
Elon was easier, I'll tell you that.
Oh wow.
Hey, James, a couple more Tesla questions. You mentioned the Cybertruck. How are you valuing the Cybertruck when it comes to your own analysis? And this is a category that Ford absolutely just dominates in here in the U.S. GM as well. And many companies over the last 20, 30 years have tried to come in and take market share. They haven't necessarily succeeded. How do you think about the Cybertruck?
Yeah, I mean, it's a separate line item that we use. We break it out by the Model 3 and 3/Y, and then X/S, and then the Cybertruck. So that's how we kind of build it out. And basically, what we learned from the call is that the cadence may not be as steep as originally hoped or anticipated. So that's a problem, and it's a high cost. It's a high cost production vehicle, and if you're not pushing volume through, it's going to hurt your margins. And ultimately, the problem with Tesla near term is on the margin side. And if you're getting lumpiness on the power business, which is their fastest growing segment as well as their highest margin segment, which is a higher margin than their auto segment, then you just have uncertainty, and uncertainty unfortunately leads to multiple compression.
Hey, in your fund, your Clockwise Core Equity and Innovation ETF, Tesla's definitely a big holding. Have you been buying or selling shares of Tesla?
No, it's about a 4% weight. Our top holdings are around 6.
Right, they're more than
Amazon
that.
is
But are you buying or selling any?
Yeah.
Or have you, as of late?
No. We held down to the full position basically here. Just looking at fundamentally, you had downside of about $200, technically downside of about $210. We tested the technical limits on the downside, bounced off of those, but we may look to trim because fundamentally, like I said, the valuation has been pushed out 1 year, and there may be better opportunities to deploy capital. So if we get a broader market bounce, which we do anticipate is a highly probable scenario, especially after earnings this week, I think Tesla can be along for the ride, and at which point we'll likely make that determination to trim and rotate into some of the faster growth and potentially higher beta names.
Hey, James, it's interesting here. You're up 33.8% year to date in the ETF. So it's been a really good year, outperforming the NASDAQ and the S&P 500. I was interested to see that your top holding is 1 to 3 month T-bills.
What's up with that?
What's up with that?
Well, what we typically like to do is we keep 10% cash on hand in a normal market environment. And, if we see risk, that cash position can go from 15 to 20%. But, with the yields that we're seeing in the market right now, I'm not going to just hold it in pure cash. I park the cash that I have in the portfolio in BIL instead of just leaving it in cash, because I can pick up super safe yield, and why not? So it's just a way to,
it's like a money
eke
for
out
you. It's like
as
a
much
money market fund, essentially.
Yeah, I mean, if I need cash to buy positions, I use BIL as a source of cash. But it's basically just a way to add additional yield for investors.
Hey, real quickly, 30 seconds. That's all we've got. Visa's up almost 2% in the after hours. It reported a massive $25 billion buyback, raised its quarterly dividend. What do we need to know about Visa, just quickly?
Yeah, I mean, it's an oligopoly between that and MasterCard. As long as the broader consumer continues to remain healthy, which we think will be the case. We don't see anything breaking just yet, hopefully not. But as long as it continues to be the case, there will be a beneficiary, and it's just the buyback and dividend increase is just music to my ears. So we continue to like it.
Yeah, the CEO in the press release saying, as we enter a new fiscal year, I'm confident in our ability to deliver against a backdrop of geopolitical and economic uncertainty. Talks about tremendous opportunity ahead. So there you have it.
Is he headed to Washington to be Speaker of the House?
You're
James
done.
Chakmak?
You're done, Chakmak. You can go home now. Next Speaker of the House, James Chakmak over at Clockwise Capital. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Just real quickly, the latest on the Israel-Hamas conflict, because the headlines continue to cross as we speak. UN Secretary General calling for an immediate ceasefire in Gaza at the Security Council. President Biden, Tim, saying humanitarian aid is not getting into Gaza fast enough. Secretary of State Antony Blinken saying pauses in the conflict may be needed to organize help for civilians as Israel extended its bombing campaign. So as we said, the headlines continue.
And the conflict continues. Also, this was a must-read for us today on the Israel-Hamas conflict, especially as the most would argue that it is, yes, about what happens next in terms of the expected Israel ground invasion in response to Hamas's surprise and deadly attack on Israel, now more than 2 weeks ago. And then what happens after that? What's the future of Israel and Palestine existing side by side? One state, two states, and what could it have been a generation ago, Carol?
Yeah, someone who has a very informed view on that is the man who withdrew from Gaza some 18 years ago and has a plan, I guess you could say. We are so appreciative to have with us Bloomberg News international affairs columnist Mark Champion. He's on the road as he continues to report on the conflict. He joins us now on the phone from Israel. First up, Mark, how are you and what are you seeing on a daily and hourly basis?
Well, I mean, fine. It's like a lot of war zones. It's very calm in most of the country. There was, some alerts today in Tel Aviv because there was quite a big rocket shower. But generally, quite calm, quite quiet, and of course, not at all in Gaza and immediately around Gaza, where the Israeli armed forces are gathering in very large numbers, and then up in the north, where there's been some, increasing exchanges of fire between Hezbollah and the Israeli Defense Forces.
I want to get to your column in just a second, Mark, and dedicate significant time to it because it's such an important and it's such a great read. But first, I want to just ask you your opinion on whether or not you think Israel is already fighting a two-front war or will be fighting a two-front war soon.
Well, that is, in a way, the immediate question. So they are not yet fighting a two-front war. They are conducting, fairly limited skirmishes and exchanges of fire with Hezbollah. Hezbollah is a large force. It is not as big as the IDF, but it is a large force, around 100,000 troops or so. They have, an estimated 100 to 150,000 rockets and precision-guided missiles. Many of those missiles are much larger than what Hamas has to fire at Israel. So if that becomes a second front, it will be a very significant war. And the Israelis will have no alternative other than to go in and to try and destroy, the rocket launchers, etc., at source. So it will be a ground war, and it will be large, much larger than what is going to happen in the south, where Hamas is embedded in a densely urban area. So they are very difficult to get out. There's all these tunnels that they have spent years digging in preparation for exactly this event. And so it will be difficult, but they are a much smaller force.
All right, so Mark, so as we contemplate the possibility or likelihood of a large, dense ground war there in Israel and in Gaza, we do need to, and many would argue we need to think about what happens next. What's the plan afterwards? You had an hour-long, approximately, conversation with a former Israeli prime minister. Can you talk to us about that and his plan and his thinking about one state, two state, what has to happen?
Yes, I mean, this is Ehud Olmert, and he was the prime minister just immediately after Israel withdrew from Gaza. So they took all the settlers out who had been the Jewish settlers who had been in Gaza. They took them out, not very willingly, and they also withdrew the army because they had been occupying Gaza since 1967 in the Six-Day War. And it decided, this is what Olmert was telling me, and what I really wanted to understand was, so why did they do this? What did they hope would happen? And obviously something went wrong, so what went wrong? And essentially what he said was, look, it had become clear to us that the occupation needed to end because it was damaging, obviously, the Palestinians, but it was damaging us too, because it is extremely unhealthy, and it makes you do things, to other people that are just are not good for you yourself. So, as a society, we felt we needed to start doing this. We have been trying to negotiate an agreement, an agreed two-state solution, and it wasn't happening. So we decided to just pull out and separate. And so then he became prime minister. Immediately after this, it had actually been his brainchild, but Ariel Sharon, his boss and the prime minister, had a stroke, and so he took over. And then he was not in power for very long before. So in 2008, they came probably closer than they ever have to an agreement with the Palestinians. So that was what he was trying to do, to use this as a way to kind of force the pace on a two-state solution. He then was out of power. Netanyahu took over. And we've had 15 years of a very different policy, which is essentially not aimed at a two-state solution.
Well, and this, I just want to go to, in your column, that he believes that it was Benjamin Netanyahu's decision to build up Hamas and weaken its West Bank rival, the Palestinian Authority, to eliminate any credible partner to continue settlement negotiations that change the whole direction of travel. Does Benjamin Netanyahu have to go in order for there to be some kind of two-state solution, which sounds like that's what he's arguing for, or it is what he's arguing for?
Well, that would definitely be Olmert's point of view. He thinks Olmert himself resigned. There were corruption charges against him, and he was eventually convicted. But he resigned, and he feels that Netanyahu should do exactly the same. And he said that the longer he leads it, the messier it will be. But I think the real issue here is that Netanyahu is at the head of a coalition government, which is the most right-wing that Israel has had, and it has been extremely aggressive in terms of pressing settlements into the West Bank, and has not pursued any kind of two-state agreement. So if you're going to have a solution, if you're going to have a strategy that envelops the military campaign and offers some kind of end state for the Palestinians who will suffer during this, then it's going to be difficult for this government to deliver it.
Well, Mark, we just have 1 minute left, but in your opinion, or in Olmert's opinion, it is even possible moving forward, given what's happened over the last 15 years with the rise in settlements, especially in the West Bank.
It will be extremely difficult, and some of those settlements will have to go, just like they did in Gaza. And that's his point. It can be done, but it takes some very strong leadership. Is
there political will within Israel to do this?
At this point, I can't see it. But there is going to be a huge reckoning with Netanyahu and his government over the security lapse that led to October 7. And we will have a new government, perhaps a new situation that would make it possible.
Incredible column, and you remind us of a lot of hatred and hostility among the Palestinians, and so you understand maybe their anger here, but you also get into how they are a rising population, so demographically very important, which is why maybe a one state would not work. It's brilliant, and it really is a very smart part of the conversation when we think about what happens next. Stay safe. Mark Champion, Bloomberg News International Affairs columnist Mark Champion, joining us on this Tuesday on the phone, where it's getting late there in Israel. All right, you are listening and watching Bloomberg Businessweek. I'm Carol Massar, along with Tim Stenovec.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Okay, something we talk about a lot wrong with the internet at the moment. The big social media platforms have embraced efficiency, and you've got moderators who once made sure that our feeds had a rough correspondence to the truth have actually lost their jobs, so leaving regular users to sift through an ever-accumulating pile of misinformation, rage bait, and ads for Cheech and Chong gummies.
Do you see those on your X? Do you see those, Carol, when you scroll through X?
I am so frustrated with X. Like, I'm not even on it.
Everyone Cheech and Chong over and over again.
Yeah. I mean, I hear they're very relaxing.
Great
way to unwind.
The algorithm's not working.
They are productive.
Okay, there is an exception to all of this, though. A shining beacon to the glory days of the internet, and maybe even to knowledge in general. We're talking about Wikipedia. It's the online encyclopedia, of course. It doesn't collect personal information about readers. It doesn't have any advertising. It does make some appeals for, people to donate.
All the time.
Yeah, it does. There are no influencers. And, Carol?
What?
There's no cat turd. I just want
Google it.
I just
It's on
wanted to say
probably
cat turd on the radio.
There's probably a Wikipedia entry on it. So let's get to it. Max Chafkin writes about it in today's edition of
Those were his words.
BW Daily.
I was just reading right from his story.
Don't blame me for cat
He's
turd.
probably at his desk and he just chuckles his way through these things. It's the BW Daily, the Bloomberg Businessweek newsletter. It gives you the power of Business Week in a handy dandy form. Sign up at Bloomberg.com/newsletters. You can also read Max's story on the Bloomberg. He's here in our studio. Whoever thought Wikipedia?
Well, it's one of these, it's like a part of the internet that I think we all take for granted that I've only been thinking about this over the last week or so because Elon Musk has spent a lot of the last week attacking Wikipedia. He's in something of a tiff with the founder.
Can I just tell you, he's ticked off at everything right now.
Well, he's tiff prone, we should say. But in any case, Wikipedia is super interesting because, it's been around since 2001. People who are about my age, I'm 41, will remember that, college professors, high school librarians were very down on Wikipedia when it was launched in its early years. But over the years, there's been basically study after study showing that it's very accurate or compares well to traditional research sources. And I think really importantly, as you said in that intro, Tim, it doesn't do a lot of the stuff that we've come to associate with the negative parts on the internet. There's no ads. There's not a lot of rage bait. And there's a real care about the truth. And what's super interesting when you look at sort of recent research about Wikipedia is it's actually gotten less fringy over the years. So our normal thought about social media is it sort of tends to suck people into these far right or far left or just weird and kooky rabbit holes. Wikipedia has actually become less like that, which is super interesting, and I think maybe worthy of acknowledgement, if not outright celebration.
So the question is how?
Yeah, so it's a couple of things. I mean, one big reason I think is the business model. You don't have this engagement-driven business model that depends on getting people to stay there for a really long time. So if your goal was to maximize ad spend, what you'd probably want to do is have lots of controversial articles about about the wildest topics. So conspiracy theories or just fringe stuff. Wikipedia doesn't do that. The other thing is there was a conscious choice made by moderators, these people who work essentially for free to maintain Wikipedia to favor, mainstream news outlets and academic journals over kind of what you might think of as the do your own research school of fact finding. And that, of course, is in marked contrast to the trend that we've seen, not just from Elon Musk, right, who's been in this kind of long running battle with the mainstream media as he sees it, but also Facebook and all of the other social networks. They've all moved away from news. They've all moved towards this kind of favoring influencers essentially over, academic papers and mainstream news organizations. And I think that's had a negative impact on the sort of truthfulness of what you find on the internet.
Not going to name names, but I think it's fair to say that people in the media business, maybe a few on-air, anchors and talent occasionally are like, oh, Wikipedia, I've just been jammed a story. Let me quick look there. Having said that, is it accurate? Is it reliable?
So, and when you talk to people who've studied this, the answer broadly is yes. It compares well to, traditional news and information sources. That said, it kind of depends what you're looking at. So well-trafficked Wikipedia entries are extremely accurate. I talked to an academic, Amy Bruckman at Georgia Tech, who said it's the most accurate information source ever created in human history for topics that are sort of well-trafficked. And that includes controversial topics. So if you look at the page for the war in Israel right now, you will see a thorough, fair-minded, very fact-filled entry. For stuff that's more niche, where you maybe only have one or two editors, it's a lot less reliable.
I don't even think I have a Wikipedia.
I don't either.
We're gonna have to change that. Maybe someone, one of these, tens of thousands of editors can go and do that. But it actually brings up a good point. Carol brings up a good point, Max, is what happens when maybe a previously unknown presidential candidate wants to jump into the spotlight and hires some interns who go and try to, kind of edit the Wikipedia entry a little bit.
Yeah, Vivek Ramaswamy got caught out, essentially hiring somebody. This was actually disclosed on the Wikipedia page.
I love this.
So totally above board. But I think this is a good example because he was called out, number one.
Yeah.
And number two, it essentially called attention to the thing that he was interested in, kind of affecting the Wikipedia entry on, which was this fellowship he had received from a Soros-connected nonprofit. And I think this tends to happen a lot. People will actually get caught trying to manipulate Wikipedia, and it sort of does a Streisand thing where it essentially calls attention to the ways that the truth is being manipulated.
Explain what the Streisand effect is.
That's the idea that when you deny something or you try to cover it up, it only calls more attention.
Barbara Streisand tried to do it with one of her homes, years ago, and then everybody was like, "Oh, Barbara Streisand's home. Let's go find it."
And so rich guys and powerful people are constantly stepping in it, either trying to edit their own Wikipedia pages. That's like kind of amateur hour, or like hiring someone to do it, which is the case that happened here. And again, I should say this was disclosed, and that's part of why we found out about it. But Wikipedia has a very transparent system for showing you how stuff is edited. So one thing that's great is that if some false fact or conspiracy theory shows up on Wikipedia, it'll be taken care of. It'll be disappeared very quickly. That's the opposite of social media, right? Where you see these kind of engagement bait headlines and so on just circulate widely, even after they've been debunked on Wikipedia. They go away, and you have this paper trail essentially where you can go back and see what happened. So you can see, was it deleted appropriately? What is the truth of it? And so when you get into, well-trafficked topics such as presidential candidates, you're not necessarily going to get the most, the best written article,
right,
but you're going to get something that is likely to be mostly factually true, relatively fair and balanced, and importantly, something that you can kind of audit yourself, right? There are these citations, you can go through it, you can decide, hey, how true is this? How much do I trust this?
It's like amazing, right? In this kind of mess of policing when it comes to social media, that there's kind of these Puritans, or I don't know if that's the right word.
I know, not paid, like very idealistic.
Yes.
It's a throwback to the way the internet was in its early days.
Max doesn't have a Wikipedia page, but he's cited many times on Peter Thiel's Wikipedia page. I don't know if you knew that, Max.
I'm not noteworthy enough, and that's another big debate that happens on Wikipedia.
In our minds, you're noteworthy enough.
That means everything.
Also, read his book about Peter Thiel. It's good.
We could write one. All I'm going to tell you is you also have to check out his story. Either go to X or Twitter or at Chafkin, or go to the Bloomberg or Bloomberg.com, because there's just one thing in there. Because this is a family show, but about Elon offering $1 billion, but there was a name change to what it would be called. So we're going to leave that on the table, shall we?
Sounds good.
It'll make you chuckle, though. All right, we got to run. Max Chafkin, yes, you deserve a Wikipedia page and so much more. He is columnist for Bloomberg Businessweek.
Also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. We've got just under 18 minutes left in today's trading session on this Tuesday, October 24th. Some big earnings coming out after the closing bell. Interesting story that just crossed on the Bloomberg. The last time U.S. yields rose so much, it sank the economy twice. We're talking about going back to, I guess it is the 80s, maybe? I got to look into this story, but nonetheless.
Yeah, it's the biggest increase since the 1980s when Paul Volcker's efforts to slay inflation pushed the 10-year to nearly
a double-dip
16%, Carol.
Yeah, see, so we've got a ways to go, folks.
We do. But you know what's coming sooner?
Yeah.
Hopefully.
Earnings,
yeah, after the bell. We got a handful of earnings. We got Alphabet, we got Visa, we got Texas Instruments, Carol, we got Microsoft as well. No one better to talk about all these companies and the greater markets than Sam Stovall, Chief Investment Strategist at CFRA. He joins us on Zoom from Allentown, Pennsylvania. Sam, how are you?
Hey, Tim. Good to talk to you. Hi, Carol.
Hi.
We'll get to earnings in just a second because they're going to be crossing fast and furious in just about 17 minutes. But first, got to get your take on the resilience of the U.S. economy here. We hear it over and over again, especially focused on the U.S. consumer. Yields above 5%, pretty much across the curve. What's your take?
Well, and I think we're going to get an additional surprise on Thursday when we see the GDP number come out for the third quarter.
You think it'll be? What do you think it'll be?
Well, street estimate is about 4.5. Our economists are saying 4.8, and the most recent Atlanta Fed GDP Now forecast was for 5.4. So it really seems as if it's going to be a very strong quarter. That said, however, I think we're going to be slipping back to around the 1% area for the final quarter of this year and the first half of next.
Yeah, it's always like, not what you did for me like yesterday, but what are you doing for me today, Sam? Hey, so having said that, all right, so we're reporting, for the most part, third quarter earnings. We're getting those reports. We are continuing to be surprised by the resiliency in the economy, as you said. Earnings, what has surprised you most about what we've seen so far this year when it comes to corporate earnings?
Well, as you said, just the resiliency of it all, because when you think about the brick wall, in a sense, of higher oil prices, higher interest rates that these companies have been running into, instead of bouncing off, they've been breaking through them. So it looks as if this will end up being another quarter in which we have the actual results exceed end of quarter estimates. We thought it was going to be down 1.5%, but it looks as if it could be swinging into the positive.
So what does that mean for some of the companies that you follow?
Well, what it certainly means is that we're going to be sticking with the more growth side of the equation that we've been sticking with since the beginning of the year. So communication services, consumer discretionary, technology, and more recently, energy, because we're looking for good growth now. But also it gives us optimism for the market itself in 2024, since all 11 sectors are expected to post year-on-year gains, and 5 of them were expected to show double-digit growth.
Wait a second, Carol. I thought higher interest rates were supposed to kill those growth companies.
I don't know, Sam, that's for you.
Okay. Well, it would kill the growth or growth companies if the interest rates were to exceed profit growth, et cetera. But with the economy doing so well, with the jobs numbers holding up quite nicely, I mean, let's face it, the unemployment rate that we're seeing today is well below what economists thought was the full employment rate many, many years ago.
Well, therein lies the rub, right? Like if higher rates alone may be not problematic, especially if people are working. But, as our Gina Martin Adams talked with this earlier in the week, she said, margins have held up because inflation backed off. If we start to see inflation kind of rearing its ugly head again, that could potentially show that the cost equation of doing business will show up in margins being squeezed. I'm just curious if that's on your radar as well.
Well, we did see the backup in inflation over the last couple of CPI and PPI reports. Yet more encouragingly, however, the PCE, the one that the Fed really likes to look at, has actually been descending quite nicely. Expectations for later this week are that, again, we'll see a 3.7% year-on-year change for the core reading of PCE, and that'll be down from the 3.9 of the month before and 4.3 from the month before that. So the trend is still our friend in that regard.
Can I ask you about the trend in terms of the 4 mega caps? I'm talking about the big guys. Meta, Amazon, Microsoft, Google combined generated $53 billion in profits last quarter, about 15% of the earnings generated by the other 437 S&P 500 companies combined, if you back out financial companies. You talk about it, we talk about it, about the overweighted impact, if you will, of a few good names, if you will, when it comes to the markets. How do you think about that when it comes to earnings? And I wonder if there's so much left out, as you say, maybe that provides investment opportunities going forward.
Well, certainly, the question is, what have we been doing in terms of the mega caps, the Magnificent Seven, really ruling the day in terms of price changes, earnings growth, et cetera. And they have continued to do relatively well. Looking last Friday at those sub-industries, and there are 153 of them in the S&P 1500, and only 8%, fewer than 10, were above their 50-day and 200-day moving averages. And the interactive media and services, where you would find Alphabet, system software, where you find Microsoft, were still among those. And I think it's because analysts are expecting very strong earnings growth rates. And looking at the performance thus far in the year, actually what we've been seeing is pretty good growth for the market as a whole, but also for some of the sub-industries and some of the companies in them, even though the big Magnificent Seven are the ones that really have been driving everything. You've had participation with a good 50 to 60% of the other companies within the S&P, so it's not just those Magnificent Seven.
All right. Always good to check in with you. Be well. Sam Stovall, Chief Investment Strategist over at CFRA.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.